Hi, good evening, everyone. Now, welcome to our Let's Learn Futures webinar series. This webinar series is brought to you by Bursa Malaysia and managed by our company, Excellent. Now, we have a very interesting topic for today, which is winning the game in futures trading. Our session for today, we are going to divide it into two sessions. The first 60 minutes will be presented by our speaker for today, CY Saw, followed by 30 minutes of Q&A session. I'm Ting Ting. I'm your moderator for this session. Now, as usual, before we start, can you please check whether you can see my slides, you can hear my voice or not? If you can see my slides, you can hear my voice, can you please just type in the chat box 1111? I repeat, if you can see my slides, you can hear my voice, can you please just type in the chat box 1111? Or else there's an emoticon, you can press on the thumbs up as well. So let me see whether you can see me, you can hear my voice or not. Very good. I can see many of you responded. Don't be shy, you can just respond. Now, let's continue with today's session. If you can't see my slides or you can't hear my voice, please follow these steps or else you can check with our admin. Now, as usual, please off your video because just in case maybe you are naked or you forget to close anything. So please remember to off your video. Another thing is video also will take out a lot of bandwidth. So I hope that you can off your video. Now, along the presentation by our speaker for today's CY, if you have any question, you do not need to wait until the end of the session to ask your question. You can start to submit your question because at the end of the day, we'll prioritize those questions that is related to today's topics itself. So you do not need to wait until the end of the session. But for your question, please do not submit your question in the chat box. I repeat, please do not submit your question in the chat box because I might miss your question. So where can you submit your question? You can click on the Q&A box at the bottom. If you're using mobile phone, etc., you can see there's an advanced button. You can click on the advanced button. You can see on the Q&A box. So once you click on the Q&A box, you type in your question and please select all co-hosts so that I can pick up your question accordingly. I repeat, please do not type a question in the chat box. Now, not only for today's session, for those who participated our previous session, you should know that every Tuesday we are going to have this session for different languages, different topics covered by different speakers as well. For example, next week we are going to have a Chinese Mandarin topic. So this is related to stress, followed by subsequent 2 weeks, we are going to have an English topic. And after the Raya, on the first week of May, we are going to have a Malay topic. So any topics that you are interested, you can start to scan this QR code to register accordingly so that you can keep it in your calendar or there's a reminder will be sent it to you. So just register as soon as possible or else in the chat box, I believe our admin already put a link. You can click on the link to register accordingly. Now, not only Let's Learn Futures webinar series, Bursa Malaysia also prepare a series of online workshop. Now, this online workshop is not suitable for everyone to participate. This online workshop is suitable for those who are seriously getting yourself started in futures. So this workshop, online workshop 1 and 2, we are going to cover from A to Z, meaning from the start, which you do not really understand what is futures until you are able to submit your first orders. So this is not suitable for everyone. So if you're interested, then only you register accordingly because this online workshop, we have very limited space. If I'm not mistaken, just now I saw that on the 30th of March, this class is already full. But don't worry, subsequent, every month we are going to have one different languages. So the upcoming for English session will be 4th of May. So for those who missed the 30th of May, you can start to register for 4th of May so that you will not miss the session itself. Every session we are going to open for 130 to register, but on the day itself, we only accept 50 online attendees. So you're going to see that online workshop 1, we are going to cover the complete guide for beginners to futures trading with train simulation. And for workshop 2, we are going to cover how to create an effective futures trading plan with train simulation. So for those who are interested, if you can understand Mandarin, you can register the upcoming session on 20th of April. If you cannot understand Mandarin, you can register for the next session, which is on 4th of May. Now, I'm going to introduce our speaker for today before we are going to start with this session. I believe many of you really familiar with CY. CY Saw, he's a CMT. He's currently the lead trainer for Excellent, and he's also the lead hedging and risk management consultant. He's also a CMT, which is the Chartered Market Technician Chartered Holder, and he has a vast trading experience in local and international stocks and futures market. You can see that it's very lengthy for his speaker profile. So basically, his specialty is in trading system and strategies, trading psychology, coaching, and also counseling. So without further ado, please allow me to pass it over to you, CY.
Hi, good evening, everyone. I hope all of you are doing well today and are ready to learn some valuable lessons about how to win the game in futures trading. I believe everyone who comes into the world of trading, right? Everybody wants to win, right? How many of you here wants to win in trading? If you would like to win in trading, you can type in I in the chat box so that I know your primary purpose in trading is actually to win. Your purpose in trading is actually not contributing the money to the market. Am I right? Because when it comes to trading, each and every one of us, our primary single purpose in trading is actually we want to win in the market. We want to make some profit in the market, correct? And of course, losing, although it is part and parcel in trading process, but we do not want to constantly lose and contribute money to the market, correct? So nobody wants to lose the game and nobody wants to lose money, and losing seems like not an option at all. So in the dynamic world of financial markets, first and foremost, we must know the rules of the game. And if we do not know the rules, it's difficult for us to navigate our way to success and win the game. So in today's webinar, I will be sharing with you a broad overview so that you can see a bigger picture of what are the things you need to equip yourself for success. And I will be giving you some directions and guidance on where to begin so that you can better prepare yourself in how to win the game in futures trading. Before we begin, I would like to give a quick disclaimer. This presentation is for educational purposes only, and it's intended to give you a general understanding of futures trading concepts. If there's any trading strategies I share in this presentation, it's not a substitute for a plug and play strategy. You still need to put in some effort on your side to develop strategies that suit your individual needs. With that being said, I hope that today's session will help you widen your horizon and expand your knowledge of futures trading. So whether you are a beginner or an experienced trader, there's always something new to learn, and I'm confident that you will find something valuable and insights that I will be sharing you today. So as Ting Ting mentioned earlier, my name is Chun Yen, but you can call me CY. So first and foremost, my background is in trading and traditional finance. I'm also trained in psychotherapy and counseling. So you know how challenging it is, to become a consistently profitable trader. And one of the biggest challenge most traders face is actually trading psychology. And over the years, I have worked with traders of all levels, from beginners to experienced professionals, helping them to develop the necessary skills and mindset needed to succeed in the market. I also help them to solve trading psychology issues and overcoming mental blocks. So without further ado, let's dive into today's content and explore how you can win the game in futures trading. Today, I will be dividing into 4 key topics that will help you understand the 4 important things you need to know in futures trading. Topic 1, the key success factor to win in futures trading. Here, I am going to share with you the key success factors that are crucial in futures trading. Topic 2, understanding margin and leverage. Because you are trading futures, there may be something new to you. So it's important for you to understand this. Topic 3, types of trading error you must avoid. In futures trading, if you can avoid all of these trading errors, or at least reduce these errors, you are at the right path in progressing yourself towards success. And lastly, topic 4, trading for a living pathway in becoming a professional futures trader. Some of you might be exciting in becoming a full-time trader because doing futures trading for a living. So here I'm going to share with you some of the career pathway of how you can do that. So are you ready to take your futures trading to the next level or not? If you're ready, type in yes in the chat box and we will get started. Great, thank you very much. Now, before we begin, let's take a quick poll. I would like to know how many of you here is relatively new in futures trading. So if you have less than 2 years experience in futures trading, you can type in yes. Yes. If you have more than 2 years experience in futures trading, you can type in no, so that I can adjust my delivery method accordingly. So I see there are majority a mix of yes and majority is actually yes in the chat box. So majority here is relatively new in futures trading. So for those of you who have more than 2 years of experience, I believe you will also gain some insights to enhance your understanding better about futures trading. So I'm going to speak in a simple language possible and avoid most of the jargons, all right? Now, as you can see this picture, can you let me know what or whether there are any differences in these activities? Just think about it, just compare these two pictures. Do you know what are the differences here? Now, some of you might be thinking both pictures are doing the same thing, right? Both of them in the water, they are swimming, just only at different locations. One in the swimming pool, the other one in the sea. Not much difference. But in fact, there is a huge difference. Coming from my own personal experience, although confidently that I can, swim in the pool, and I thought I could do the same thing in the ocean, just swimming a short distance, no problem. But when I started to swim in the ocean, right, 10 meters away, 20 meters away, my opinion towards swimming started to change. I begin to panic a little bit. So I immediately swim back to the boat. Now, coming back to futures trading, many people come to futures trading. Most of them have more or less some trading background, especially trading the stock market. And they think that they can apply the same method of trading stocks to trade futures. And one thing that they are not aware is that they are actually in the new and different trading environment, which is the futures market. So similarly to the example of swimming in the pool versus swimming in the ocean, you need to adapt to new and different environment. You need to learn new rules about futures trading. You need to customize your trading approach to trade futures. Now, of course, I'm not saying that which market is difficult to trade. That's not what I want to highlight, because there are equal number of opinions. Some people would say that stock market is easier to trade. Some say futures market is easier because they don't have to look at so many things. What I want to highlight here is that you need to adapt your trading approach to new and different environment. You need to have a good understanding with the environment so that you are able to survive and win the game. Because why? Futures trading is slightly different from stock trading. You can still use technical analysis, you can still use fundamental analysis, but you need to customize your trading strategy to trade whatever futures product, be it in index futures, commodity futures, or currency futures. Now, as you may have not already know that in Malaysia, we currently have the second tallest building and structure in the world, which is the Merdeka 118 Tower. I'm not quite sure whether you are aware of this building or not. And as you can see in this picture is the groundwork foundation. I searched throughout the internet. Like all skyscrapers, especially those mega tall skyscrapers, if you want to reach the sky, you want to make sure that you take time to build the foundation. And oftentimes, when we see all of these construction projects for tall buildings, they took so long time to just even build the first level or even second level. But after that, you will be surprised to see that the progress certainly would be very fast. You can see, 10 floors, 20 floors and beyond. So this principle applies to trading as well, because we need to equip ourselves with the necessary knowledge and skills. We want to make sure that our foundation is deep, our foundation is strong. So whatever happens in the market, we will not easily get panic. We will not be losing direction or even lose hope. When our foundation is strong, we can be confident with ourselves. We can have confidence towards our trading approach in the market. So being successful in trading takes time. So you need to be patient with yourself. So the process of laying foundation here is very important. So let's get started with the first topic, the key success factor to win in futures trading. Now, there are 5 key factors for you to win the game of futures trading. So the first factor would be having the knowledge of the market. Second, trading strategies. Third, have an effective risk management approach. Fourth, discipline and resilience. And lastly, your personal finance. A lot of people miss out this key factor. So in the next few slides, I'm going to explain it all one by one so that you have a better understanding, because all of these 5 factors are very important to determine your success in futures trading over the long run. Because in trading, we are not just trading for the sake of short-term profit. We want to make sure that our trading is sustainable and grow our wealth over the long run. Now, the first factor, knowledge of the market. Number 1, definitely you must have the product knowledge. Even though you may have some trading experience in stocks, however, now that you are trading futures, now that you are in the futures market, it's a completely different product. So it's important for you to understand what futures product you trade. So this includes the contract specifications. Different futures products have different contract specifications. For example, the index futures, FKLI and FM70, they are different from commodity futures like FCPO, FEPO, and FGLD. So you need to understand their differences. The mechanisms of futures trading is different from stocks because of leverage and margin, which I will share with you in the next topic. And in futures trading, for example, FKLI and FCPO, you will notice that there are many contract months. So which contract months should you be trading? And which types of charts you need to use in order to make your trading decision? There are many types of orders in trading, like limit order, stops order, and market orders. So if you're not well equipped with the necessary product knowledge, if you have lots of basic questions about futures trading, then it's easy for you to make unnecessary mistakes in trading because you simply do not know what you are trading. So therefore, if you are free, you can actually enroll into Bursa's free LLF online workshop to learn these foundational knowledge before you trade futures with your real money. Number 2, about the knowledge of the market. Of course, you need to have trading knowledge. For example, technical analysis and fundamental analysis. You need to learn some tools in order to how to analyze the market. You need some tools in order to identify what is the direction of the market. So if you only have trading knowledge, but you don't have the product knowledge at all, you are bound to make simple and basic knowledge that you could have avoided. So with these 2 knowledge are essential for you to trade futures. Now, you may probably heard of this phrase or this quote where education costs money, ignorance costs more. Having education in trading may oftentimes cost you some time, effort, and money, but ignorance, such as lack of knowledge, not understanding the market well, not understanding the product knowledge, just to name a few of them, these would surely cost you more in trading in terms of losing money. And in other words, you would be paying lots and lots of tuition fee to the market and still not know what are the mistakes that you have already done. So don't develop ignorance, because things that you don't understand or trading knowledge that you don't have yet, you definitely need to educate yourself before you put in your hard-earned money in trading real time. Now, the second key success factor in trading is that trading strategies. Once you have developed some trading knowledge, for example, technical analysis or fundamental analysis, this is where you can actually go further in developing trading strategies. Now, a lot of people just learn technical analysis and fundamental analysis, but you can actually take this even further by developing trading strategies. How to time your entries and exits the market, how to develop a winning trading strategies and trading systems. You can do some backtesting and case study, for example, by looking at charts and applying your trading strategies, or do paper trade, where you can, actually do some simulation. Where are you going to enter the market? Where are you going to exit? What happens when this market situation happen? What are you going to do next? So you can see whether it is profitable across multiple trades. So for starters, start with simple trading strategies. You don't have to use too complicated methods or use too many tools or technical analysis. Otherwise, you would have analysis paralysis. You may be taking too much time in analyzing the market and missed out opportunities. So once you are confident with your trading strategy, you have already tested out, you have already gone through case studies, this is where you can actually test it out through trading simulation or even paper trading. Once you are more confident, you can start trading small with real money, because you can start with trading one contract lot for a period of time until you get comfortable with your trading strategy with real money. If it shows positive results, this is where you can slowly, increase your trade size. The third key success factor is effective risk management. As you begin to develop, trading experience, trading small, you will soon enough realize that the importance of risk management in trading. You want to manage your risk, you want to minimize your losses, and you want to learn how to protect your profit and your trading account. So here are a few several ways for you to manage your risk. Of course, number one, you begin to improve your entries and exits further. You begin to improve your timing in entering the market. You improve your timing of taking profit as well as cutting losses. And secondly, you begin to learn the importance of cut loss. So yes, cut loss is not pleasant. Till today, even though, being an experienced trader, I still do not like the feeling of cut loss, but I have to cut my losses in order to protect my trading capital. However, you will realize that how important it is to manage your losses and keep your losses in control. The third method of effective risk management is position sizing. As your account size grow, from trading one lot to two lots and more contract lots, this is where you will learn how to manage your trading size, whether to trade more contract lots or trading less contract lots in order to manage your overall trading account risk. And lastly, portfolio management. So if you are still trading very small, you don't have to consider portfolio management yet, because portfolio management comes after you have gained trading experience, when your portfolio size or your trading accounts slowly grow. And this is especially beneficial if you want to build a diversified and solid portfolio. So if you just only trade stocks, you might want to consider adding some futures product to your portfolio, because some futures product, they can serve as a good diversification benefits to your overall portfolio. You can use futures contract to hedge and risk management purpose in order to minimize your overall portfolio risk. And of course, in futures period, I did I do have some topics that we'll be covering about, how you can use futures contract in terms of diversifying your portfolio through portfolio management. So just a quick note about understanding risk. As Warren Buffett mentioned, is that risk comes from not knowing what you are doing. And in fact, the biggest risk in trading is not the uncertainty in the market. If you were to ask, those experienced, those consistently profitable traders, they would tell you that the biggest risk is actually not the uncertainty in the market but yourself. We can't control what happens in the market, we can't control the volatility in prices, but we can control how we manage our risk. We can control how we deal with the market through our trading strategies. The fourth key success factor is discipline and resilience. Now, one of the successful trader in the olden days, his name is called Richard Dennis. I'm not quite sure you are familiar with this guy or not. So he is actually one of the developer for Turtle traders in using systematic and structured trading approach. So he trained a new group of people who are very new in futures trading by using a trading system. So this is actually what he has said in one of his books, is that I always say you could publish rules in newspaper and no one would follow them, and the key is consistency and discipline. So, and you can see, even though when you read a lot of books regarding autobiographies of those successful traders or success stories about successful traders and investors, they oftentimes credit their success towards being disciplined in how they trade the market. Well, truth to be told, that trading, like any other occupation, is actually not a smooth journey. It is actually filled with lots of ups and downs. So you need to be able to develop resilience, which means you need to be able to bounce back from failure. You need to be able to bounce back from stress and frustrations, and even from trading losses. So this is where you need to learn how to cope up with trading losses mentally and emotionally. So discipline and resilience are very important. And lastly, this is the last key success factor, which is your personal finance. Very few speakers or trainers talk about this, and I want to highlight the importance of managing your personal finance to trading success. So yes, you come into the world of trading and investing with an objective in mind, which is to make money and to grow your wealth. Am I right? So when you trade and invest, please don't forget and please don't ignore on managing your personal finances. And this includes reducing your personal expenses, save more, and don't get into too much bad debt, and increasing your earning powers, of course. Why? Because managing personal finance is important in trading, because this will help you go through tough times before you are skillful in trading. All right, managing personal finance is very important, and let me show you why in this diagram. You can see this diagram on your upper right here. It's a simple diagram to illustrate my point. So this curve is called a J curve. Okay, you can see it is actually a J shape here. Now it demonstrates that initially, when you do any investment or trading, you will definitely experience losses here first. Okay, at the initial period of time. So you can see your performance would be in the negative zone. You will experience losses first, and it takes time before you can turn into break even and then profit, as you develop good trading knowledge, as you develop a good trading competency. So this is where you will start to see your trading performance from losses to break even and then being profitable. So managing your personal finance well can actually help you go through this stage when you're not making money in trading. Okay, these are the tough times. So when you don't make money from trading, at least your personal finances will not stress you down, will not give you too much stress or even anxiety to take too much risk in trading. So managing personal finances is one of the crucial factor to determine whether you will be able to be successful in trading over the long run. So there you have it, the key success factor to win in trading futures. Develop knowledge of the market, develop trading strategies, then develop effective risk management. Then the next stage is to develop discipline and resilience, and lastly, manage your personal finances. All of these things are key success factor you need to learn by heart, so that hopefully over the long run you are able to develop the necessary competency in trading. The second topic is about understanding margin and leverage. Remember, developing knowledge of the market. Here I'm going to share with you some of the few key things about margin and leverage in futures market. It's about product knowledge, it's about knowledge of the market. So it's an important concept you must know in futures trading so that you don't lose unnecessary hard-earned money, right? Now, first, what is margin in futures? Definitely this is a little bit jargon here. Now, the margin in futures market is a little bit different from a margin in stock market. Margin in futures market is like a deposit. So for example, like you want to rent a car, so you need to pay the deposit first, right? So of course, in futures trading, you may heard the term initial margin. In other words, it is also called as an initial deposit, where you need to place fund, a minimum amount fund first required by the futures exchange for you to initiate or open a futures contract. So of course, different futures product have different initial margins requirement as required by the futures exchange. And this initial margin requirement, definitely it will change from time to time depending on the fluctuation of whichever product that you trade. So you need to be aware of this when you trade futures. So if you make profit from futures trading, you will get back your initial margin plus your profit. And if you make losses from futures trading, your losses will be deducted from the initial margin. Now, you must be wondering, why does the futures exchange have this kind of requirement for futures trading? Does any one of you understand why does the futures exchange need this requirement or not? If you do not know why futures exchange have this requirement, you can type in 0 in the chat box so that at least I know what is your level of understanding about why a margin is important in futures trading. If you do not understand why futures margin is important, you can type in 0 in the chat box, because it's a very, very important concept, although it seems not so important. But once you understand this concept, you would be glad that you're actually trading futures. All right, so I see majority, not majority, almost all people put 0, right? All right. This is a very important concept for you to understand why margin is important in futures trading. So as you know, futures trading is a zero-sum game. And for example, during an uptrend, when a person holding a long position, they are making money, correct? So it also means that the opposite party, which is the short position, is actually losing money. Right, so this is what we mean by zero-sum game. When somebody is making money, the opposite party would definitely be losing money. Now, let's say you are the winning party and you are now winning 500 ringgit. And let's imagine that, let's say if there is no margin requirement at all, so which means you don't have to deposit money to trade. Everyone don't have to deposit money to trade. Now, if you are the winning party, will you be able to get money from the losing party? Think about it. Probably not, am I right? Because there is a risk for the losing party whereby they may run away because they are losing. So in order to keep all market participants safe, the futures exchange requires that all parties, whether you are taking long position or whether you are taking the short position, the futures exchange requires all parties to put an initial margin up front first. So which means everyone has to put initial deposit up front first in order to open a trading position. This is to ensure that the winning party is safe when they make money, and also to ensure that the losing party has money to pay when they lose. So you can see that futures trading, it's relatively safe, it's regulated, it's safe for everyone, and it's also very, very secure. So I believe you are quite relieved that futures trading is regulated and safe, right? So this is why margin is actually important in futures trading to protect every market participants. So now that you already know why margin is important, now what is leverage in trading? Now, simply speaking, by definition, leverage means the ability to control a large contract value with a relatively small amount of capital. Now, of course, you may not understand by just looking at these sentences only, right? I'll give you an example so that it's easier for you to understand this concept. So let's assume right now, the FKLI is now trading at 1530 level. And in order for you to invest in the whole basket of stocks in the index, you have 30 stocks, it will cost you, around 76,500 ringgit based on the notional value of FKLI. So if you just only trade one FKLI contract to represent the whole basket of stocks, you just only need to come up with an initial margin of 4,000 ringgit, and that is only a fraction of money as compared to 76,000. So if you take 76,000 divided by 4,000, so you can see that that is about 19 times of leverage. You don't have to come up with 76,000 to own the whole market. You just only need to come up with 4,000. So here, this is where you can see there is a leverage effect there. Now, let me give you another quick case study so that you are able to see, yes, there is leverage, and where does the leverage return comes from. Now, let's assume FBMKLCI is up by 10%, okay? Now the level is 1530, so there is an up of 10%. So which means the market is up by 153 points. So if you invest in the basket of index stocks, right, your portfolio would be up by 10%. So in 76,000 of portfolio, the market, up 10%. So you get your portfolio value would be now 84,000 ringgit, which is 10% increase in value. But if you are invested in, if you're trading in the FKLI futures contract, you are gaining 153 points. So each point is $50, and that translates into 91% increase in value of your stocks. So this is what we mean by leverage in futures trading. If you just only purely trading on stocks, when market is up by 10%, you only have 10% increase in value. But if you are trading the futures contract, you can see that there is a leverage effect in terms of your trading performance when you are in the right position. So this is what we mean by leverage in futures trading. With only small amount of capital, you can have the exposure of large contract value. In stock market, your broker won't call you, but in futures market, you will be surprised that your broker will call you up to tell you that hey, you need to top up your futures trading account when your trading account falls below for example the initial margin level. So this usually happens when you are experiencing losses. When you're making gain, brokers won't call you because your trading accounts is increasing, right? But when you're making losses, it means your trading account is shrinking and you have insufficient funds in your trading account to meet the margin requirement. Now, Several ways that you can do it is that if you do not or cannot meet the margin call, you may be able to reduce your trading position in accordance to the amount of funds remaining in your account. So for example, if you're trading 2 contracts or 3 contracts, you can reduce it to 1 contract, for example. Or you can just simply close your trading position. So you can see margin call is a situation that is really quite frustrating for all traders. Right, you lose money already, and you know your broker still calling you to top up your account. However, can you avoid margin call situation or not? Now, how many of you here experience a margin call situation? You can type in 222 in the chat box. If you experience margin call before, you can type in 222. Okay, don't be shy about margin call. It means that you have experienced some unique situation in the market, because some people never experienced margin call before because they have meet certain criteria. Whereas if you constantly meet margin call over again and again, it means there is something that you need to adjust in your trading approach. All right. So yes, you can avoid margin call, and let me share with you several methods of how you can avoid margin call. There are 6 ways you can avoid margin call. So number 1, you need to have more than sufficient capital in your futures trading account so that there is less chances for you to get margin call. Number 2, definitely you need to have a good trading strategy so that you won't keep facing losses, and your trading account it wouldn't shrunk, and after that it meets the margin call situation. Thirdly, you definitely need to limit your losses small, so that if you don't cut your losses and you let your losses keep running, so which means your trading account would be shrinking and then hitting the margin call requirement. Fourth, always trade small, even though you are able to trade 2 contracts or 3 contracts. Trade small so that you have excess margin in your trading. And later on, I'm going to share with you what do we mean by excess margin. Now, fifth, don't over leverage. Don't over leverage means, for example, if you are able to trade maximum of 5 contracts, don't try to maximize the leverage in futures trading. Trade below 5, okay? Because futures itself, when you over leverage, it would bring more harm to your trading account. And lastly, you need to have excess margin per contract. All right. So here you can see from number 1 to number 5, right? Actually, all of these I'm actually referring to number 6. Okay. If you are able to fulfill this number 6, which means you are actually, you have already doing all of these 6 things together. Now, let me show with you a quick example here. There are 3 trading accounts here. Okay. Trading account A, trading account B, and trading account C. All of them are trading the same futures product, okay, whereby the initial margin is 7,000, and then they have some excess money in the trading account. Now let's make everything constant here first. All right, so here there are 3 trading accounts. Each of them trade 1 contract only, and all of them are using the same trading strategy. Now I would like you to participate in this case study. Is that, can you let me know which of these trading account has the lower chances of getting a margin call? Is it trading account A, B, or C? You can type in A or B or C in the chat box. Which of these account has lower chances of getting margin call? And same question as well, which of these account has higher chances in tolerating and surviving the market volatility? Let me finish. Which account has higher tolerance of surviving the market volatility? All right. So for the first question, of course, all of you get it correctly. Trading account C. Yes, it has minimal margin to open an account, to initiate a long or short position, while at the same time it has a very huge excess margin as compared to trading account A and B. So which means when the market fluctuates, or when the market is volatile, trading account C has a higher tolerance in terms of surviving the market volatility. It can absorb more losses, and of course, it will have lower chances of getting margin call. So whenever you trade futures, okay, whatever trading futures product that you are trading, you want to make sure that your per contract that you trade would have excess margin account possible. All right. So now that you have already learned how to avoid margin call, so I believe today onwards, right, you know what are the necessary corrective actions that you need to take so that you can actually avoid an unpleasant experience of getting a margin call from your broker. Now, topic 3. There are 5 trading errors you can avoid so that you don't make unnecessary losses just because you lack of knowledge or information. When you have enough preparation to set yourself towards trading success, you can also save yourself lots of frustration and failure. Now, the first error, of course, it would be lack of preparation. If you lack preparation, by default, you are putting yourself at a disadvantaged position. Okay, by default, your chances of losing in trading is very high. So what are the things we need to prepare well before entering the market? There are 2 things. The first thing, lack of knowledge. So here I've already shared with you in earlier slides. Having the necessary product knowledge and trading knowledge are important. Missing any of those knowledge, you are bound to make mistakes, because mistakes you could have avoided mistakes that you could have known beforehand. For example, understanding of margin, understanding of leverage and margin call. If you don't understand that, you might be, over leverage or putting too little money in your trading account and getting margin call. So just now I've already shared with you how what are the things that you can do to avoid margin call. So those are the knowledge that are actually very, very important for you to avoid unnecessary mistakes. The second thing, very important, lack of money. Yes, you heard it correctly. This also has got to do with margin. Never ever trade with too little money, because too little money will not be able to tolerate the market volatility, and you will have high chances of getting a margin call. Second thing is that never ever trade with scared money. Now, scared money means money that you cannot afford to lose, or you have a lot of emotional attachment towards too. Okay, for example, money that you need to pay your bills, money that you need to pay for your insurance, money that will affect your current living. Okay, those are what we meant by scared money. When you trade those money, you will feel the pressure, you will feel there are a lot of emotion when you trade with scared money. Why? Because these can lead to poor decision making. You will be trading emotionally, and by default, psychologically speaking, you have already lost before you enter the battlefield. So remember this. Please, don't trade with scared money, and only trade with money you can afford to lose. So which is why, in the first topic, the last factor which I have already shared with you, personal finance, is very, very important. You need to be able to manage your personal finance well, so that you have excess money for you to trade. If you trade with scared money, definitely you are, putting yourself at a very disadvantaged position to trade in the futures market. All right. So always manage your personal finance well, and only trade money with you that you can afford to lose. Second error, which is trading without a plan. I'm not quite sure whether you have a trading plan in hand or not. Because if you don't have a trading plan, it means you don't have an entry strategy. It also means you don't have exit strategy. It also means you don't have a cut loss strategy. You need to have at least these three points. Okay, these 3 strategy for you to get in, get out when you are making money, as well as getting out if you are lost in that particular trade. Okay, you need to have at least these 3 things in your trading plan. Otherwise, you are actually trading randomly and blindly. All right, trading randomly and blindly is very dangerous. You will face a high possibility of huge losses. So engaging in trades without a clear trading plan means you trade randomly. Okay, I'm not quite sure about you if you have strategy, but if your strategy is not clear enough, it is as good as trading randomly. Okay, so if you have trading strategy, one thing good about it is that you have it, and you can make it even better by make your trading strategy explicitly clear. All right, so if you don't have trading strategy, you will be trading randomly, and this can lead to random decision making, and therefore random results. Your profitable results are not consistent if you trade randomly. The only thing that I believe you would agree with me is that if you trade randomly, you will get random results, and the only thing that is consistent is consistent losing results. Am I right? Even having a losing trading strategy is actually better than not having a strategy or trade randomly at all. Because at least with a lousy trading strategy, you know what doesn't work, and slowly you tailor-make, you customize those strategy and improve those strategy to make it better. So how can you turn this around? How to turn around random results to consistently having positive results? Now, for the first thing, of course, you need to do is that you need to have a trading plan so that you can trade consistently and systematically. You need to trade with a consistent approach. If you trade randomly, definitely your trading results will be random. So when you trade with a consistent approach, whether be it a good consistent trading strategy, or even better, you have a good trading system for you to trade, then this is where you will be having a consistent decision making, and therefore you will have consistent results in trading. Make sense? So you can see trading, it's not hard. You can turn trading into a scientific manner, and it's just that simple. And of course, although it's simple, you still need to make an effort to develop a clear concrete trading plan so that you will be able to trade consistently, be consistent in your trading decision making, and have consistent results. The third trading error, this is where things become interesting, which is the poor trading execution. Now, can you let me know? I'm not quite sure about you, about your trading. Maybe you have your trading strategy already, but do you execute it correctly? If you did not execute it correctly, you can type in I in the chat box if you already have a strategy, but you execute it wrongly, or every time when you do your trading execute your trading strategy, right, it seems like you miss something here, or you have overdo things there a little bit, right? So having trading strategy is a good thing. Having a trading plan are initial steps, but you still need to be able to execute it correctly with minimal error. Now, what do I mean by poor trading execution? It means that you fail to execute trades properly. Yes, you have trading plan. Yes, you have trading strategies, but you do it incorrectly. For example, you enter or even exit positions at unfavorable prices. You enter your position too early, or you exit your position too late, even though you have trading strategy. Okay, you identify trends incorrectly. So those are one of the example, and another one which is a common error is that when price hitting your cut loss level, yet you're still quite hesitant to cut loss. You wait longer and wait and see, to see and hope that your your cut loss turns even smaller. So this is where oftentimes I like to talk about trading, is that people usually turn very religiously, especially when there is losses. So don't ever wait until your losses turn big. As long as when price hits cut loss level, please cut your losses immediately before things get out of control. So you can see all of these things can result in unnecessary losses or missed opportunities. Now let me give you a quick example. Now let's say, I believe majority of you understand the simple rule of moving average, right? Uptrend buy only, downtrend sell. Now in this chart, can you let me know how many trades should you be taking? If you think you just only need to take one trade based on the simple moving average rule, you can just type in one. If you think that there is 5 trading signal, you type in 5. If you think that there is 10 trading signals, you can type in 10. Okay, let me know how many trading signals you based on moving average itself that you can trade based on this chart. All right, I see some people type in 4. I see some 2. Okay, very well. Some mostly 4. There are 3 also. There are 5. All right. Now, basically speaking, those who answer 4, I believe you are looking at both directions. Those who put 3, it's looking at 3 by 3 buy positions. All right, that's well. Now let's have a look which are the trades, which are the signals that is provided from this chart through simple moving average. Now here is one opportunity for you to long, second opportunity for you to short, third opportunity for you to long, as well as the fourth opportunity for you to take a short position. All right, so if you have more than 3 times buy, or if you do have more than 4 times buy and sell together, then it means you do not understand simple moving average well enough, or maybe you're actually not executing your trading strategy correctly. Okay, so if you have less than 4 trades or take more than 4 trades, it means you are not executing your trading strategies accordingly based on the simple moving average rule. So poor trade execution is actually one thing that you can try to record in your trading journal so that you are able to minimize or at least reduce this error as you gain experience. The fourth error, which is the lack of risk management. Now, most people get excited about trading. They want to know the best point, the best time to enter the market, and then they forgot about risk management. So it's important to have proper risk management strategies in your trading approach so that you know how to deal with risk and not taking excessive risk in trading. There are several mistakes that show you don't have risk management strategies. For example, number one, if you ignore stop losses, price already hits stop loss level and you still ignore it, hoping market would be kind to you. So this is number one mistake. Secondly, would be over trading. You trade more frequent than your trading strategy suggests you to trade. Okay, you trade more frequent than the signals that is provided to you. So for example, if your trading strategy is supposed to give you 5 trades only, but you're doing 15 trades or 10 trades, for example, so that is what we mean by over trading. You do too much trading already. And do keep in mind is that doing too much high frequency of trading does not necessarily guarantee you to make even more money. Sometimes doing less is actually better than doing more. And thirdly would be over leveraging. It means you trade too big position. You take excessive risk per contract. You don't have a sufficient excess margin per contract for you to withstand the market volatility. So when you over leverage, you have high risk of meeting margin call when the market is against you. And the last error would be making impulsive decision, whereby you let emotions drive your decision making. Why? Because emotion would definitely cloud your judgment. So oftentimes you will be hearing those successful traders says that don't trade with emotion. You need to be as rational and as logical as possible. You need to be like a robot when you trade. Why? Because emotions can definitely cloud your judgment, and emotions can lead to destructive trading behaviors. Because making impulsive decisions based on fear, greed, and other emotions can cloud your judgment and lead to poor trading outcomes. So this will lead you to, chasing your losses by trading even bigger. You might be having revenge trading. You want to cover your losses as quickly as possible. So you over leverage. Okay. For example, in the previous position, with one contract, you make losses. So in the next trade, you use 2 contracts or 3 contracts, hoping to cover your losses as quickly as possible. Or, revenge trading also involves with over trading, where you trade even more frequency, hoping that you can cover your losses faster. So when you are emotional in trading, the best thing is that just stop trading, take a break, step away from your trading screen. It takes time for you to digest those losses. It takes time for you to cool down and clear your mind. So which is why earlier I shared with you is that discipline and resilience is very important in trading. You need to be able to discipline, to stick to your trading rules and trading system. You need to have resilience to overcome and bounce back from losses, so that you don't do silly things or even stupid things, which oftentimes we call it destructive trading behaviors that lead to losses. So these are the 5 trading errors you must avoid, or at least reduce these errors. Once you reduce these errors, you will see that your trading performance will improve gradually. Now, lastly, the last topic, trading for a living. What are the pathways for you to become a professional futures trader? Now, I believe some of you might be exciting in becoming a full-time trader or to trade for a living. Here, I'm going to share with you some of the career pathway, how you can actually do that. Generally speaking, being a trader means you trade for any of these 2 objectives. You can either trade to grow your wealth, you want to grow your trading account, and to achieve some financial goals in the future. And another objective would be is that you want to trade for a living, where you expect trading can make you an income for a living. You get your main source of income from trading. So these are the 2 general objectives in trading. So generally speaking, if you have your current full-time job in whatever occupations that you have, most of the objective is that you will be trading to grow your wealth. And if you intend to trade for a living, then this is where you would most of the time be a full-time trader, and your main income source is actually coming from trading. There are 2 ways that you can trade for a living. Now, the first approach is that you can be an independent trader. Now, independent trader means that you trade your own money, you trade your own personal money. Many traders choose to trade independently because they manage their own capital and making trading decisions based on their analysis and strategies. There are not many constraints because it's your own money anyway, correct? You're your own boss. So there is not much restriction. Another approach whereby you can trade for a living is that you can trade through a proprietary trading firm. In other words, we call it as the prop firms. This also means that you will be employed as a full-time trader. So a prop firm provides their traders with access to capital, as well as some proprietary trading tools in exchange for a share of profits. So traders at prop firms typically trade the firm's capital. You will be trading the firm's money. So this would allow you to get leverage of trade larger positions and potentially earn higher profits, because you're not trading you're not trading your own money, you are trading the firm's money. All right, so of course, trading through a prop firm, you need to follow the firm's rule in order to trade the firm's money, because prop firms, they do have some rules for traders to follow, so that the firm is not so that the firm is actually not exposed to huge risk. All right, so oftentimes prop firms will often provide training, mentoring, and also infrastructure to help traders succeed. So joining a prop firm can be a pathway for aspiring traders to gain experience, to have access capital, and also to build a track record. So regardless of whether you want to be an independent trader or joining a prop firm, being successful in trading, whether you do it alone or be with a group of colleagues, which is in the prop firm, is that you need to have discipline, risk management skills, and a solid understanding of market dynamics. So I see somebody were asking where to find these prop firms, right? Okay, quite exciting, right? So later on, I'm going to share with you where to find these prop firms, all right? Now, there are a few requirements. Of course, you may be curious to know, what are the qualifications to join a prop trading firm. Of course, in terms of education requirement, generally speaking, the general rule is if you are graduated from a background from, undergraduate degree or postgraduate degree in business, accounting, finance, or economics related, or even mathematics, you would have a little bit advantage because you learn some economics in the market, you learn some financial structures in the market, so they don't have to train you so much. But even though if you don't have this background, you can still attempt to learn self-study, okay, self-learn, and then you can try to join them. Now, of course, what are the knowledge that you need? You need to have futures trading knowledge. You need to have knowledge about the market as well as technical analysis. So it would be even better you have, you come up with your own, at least come up with, your own trading plan, have a good understanding about how to develop trading strategies and so on. So what are the personal traits for you to be successful in the trading business? Of course, this is not just only referring to joining in the prop firm. This also applies if you are being an independent trader, wanting to trade for a living. There are a few traits that would help you to be successful in the trading business. So firstly, you need to have high stress tolerance because according to Business Insider, trading is considered as the second most stressful jobs on Wall Street. Okay, I repeat, according to Business Insider, trading is considered as the second most stressful jobs on Wall Street. Besides that, you gotta have resilience to bounce back and recover from stress and losses very quickly. Second trait would be is that you need to have being a trader means you need to have high self-control and very well disciplined. So from now, even in your daily life, learn to have some self-control in terms of your personal finances, be disciplined in whatever things that you do in your lifestyle. So this is where you can begin to develop a discipline across your life so that you are able to apply it in trading as well. And another trait which I found, for those who outstanding traders is that if you want to be really, really outstanding as a trader, and if you want to make a lot in trading, is that you gotta be a good problem solver. Okay, not just only follow trading system. If you are a good problem solver, it means you are able to solve things. You are able to put or pieces and puzzles together. You are be able to see things before the market happens. So if you're a good problem solver, your trading performance can achieve greater highs. So this is actually a plus point for you. So for those of you, if you would like to know what are the proprietary trading firms or prop firms in Malaysia, I can give you some direction here. You can Google search some of the keywords. You can type in proprietary trading firms in Malaysia and make sure they are in Malaysia. Or you also can search for Bursa associate participants, or these two keywords term here. Okay, make sure they are in office is actually located in Malaysia. Then they are also Bursa associate trading participants. So there are a few companies there. I'm not going to name which of them. You can actually, if you're interested to be a full-time trader with them, you can drop an email to email inquiry to them. And just a quick tip, all right? If they don't respond to your email. Don't be discouraged. You need to take some initiative and proactive to call them until you get them. This shows some initiative and active on your part, okay? Because being a trader is actually not being a passive person. You need to be really be active, have a sense of urgency, and this is what prop firms a trait that prop firms that do really like. All right. So that's it for today's sharing. That's all for today. So here are the key takeaway points that I have already shared with you. The 5 key success factors to be successful in futures trading. You can take a picture of this slide or you can screenshot it. I have also shared with you the importance of margin and how you can avoid margin call. It's very important because this is actually one of the product knowledge, or at least the basic rule in futures trading that you must know. And I have also shared with you the 5 main types of trading errors to avoid. When you understand all of these errors, when you are well prepared, you can actually avoid these errors. You don't have to make unnecessary losses of mistakes on your trading account. All right, so that's it for my sharing. I pass this back to Ting Ting.
Okay, thank you, CY, for your very informative presentation. Now we are going to move forward with our Q&A session. Now, for those who would like to ask questions, because I saw some of the questions being asked in the chat box, as I mentioned, please try your best to send your question in the Q&A box, because if not, we are going to miss your question. Now, how do you send a question in the Q&A box? Please just click on the Q&A, then type in your question, and send it to all co-hosts. I will pick up a question and we will get our speaker for today's CY Saw to answer your question. Now, meanwhile, while waiting for your question, can you please take a very quick 30 seconds? Please provide us with your feedback, since CY already covered this session with very informative session. So what we need your help is just a quick 30 seconds. Provide us with your feedback, because your feedback is very crucial for us so that we will know what we need to do for next. Now, simply, there are 2 methods for you to access to this feedback form. You can just scan this QR code, or else in the chat box, I already saw our admin already put up the link. You can click on the link to provide us with the feedback. Just very quick, a few questions, less than 30 seconds, you should be able to finish. I repeat, 2 methods. You can take a mobile phone, screenshot, you can scan this QR code, or else in the chat box, there's a link. Please click on the link to provide us with your feedback. For those who have questions, you can start to send in your question in the Q&A box. Last 20 seconds. Okay, time's up. For those who already submitted your feedback form, thank you very much. For those who not yet submitted your feedback form, you're still on your way to submit. Don't worry, you can continue to finish your feedback form. At the end of the session, you can still continue to feedback as well. So let's move to the Q&A session. Now, CY, for the first question, this person would like to know, may I know how many percent or RM to reach in order to avoid margin call? I think maybe the question is a bit not so clear. Maybe you can cover from both areas. One is from brokers or the Bursa requirements margin. Another part is maybe from capital perspective, how much of capital or deposit that a person need to put in so that they can avoid margin call so soon or immediately, for example.
Okay, so when we refer to initial margin, right? I understand that different futures broker, they might have different margin requirement. But we use it's easier for us to at least in this webinar we use the futures exchange initial margin requirement, because those are the highest value for initial margin requirement. So generally speaking, when we, as just now I shared with you, there are three trading account, right? Trading account A, B, and C with different excess margin. So of course, when we want to open the trading position, we need to fulfill the margin requirement. But if you have more excess margin, which means additional money, you are able to actually able to avoid a lot of unnecessary margin call, because when you have a big margin, excess margin, you can absorb the market volatility for one contract. So generally speaking is that if you can take into consideration of your personal trading strategies and systems in order to determine your initial margin, is actually even better, because different trading strategies, the way the way how you trade the market, the way how you would enter or exit the market would be very different. Some trading strategies would want to taking more market volatility. Some trading strategies take less market volatility. So basically speaking, as a general rule, when your excess margin per contract is high, is actually better.
Okay, very good. Now, the second question is related to the time frame. The question is, what time frame should I use for day trading?
All right, for day trading, when it comes to time frame, right? Of course, day trading, you would be looking at those minute charts, right? From 1 minute charts to up to 1 hour or even 4 hours charts. Now, I am not quite sure what kind of strategy that you would be using, because if you're using 1 minute chart, you would have 1 minute strategy. If you are using 5 minute charts, you have 5 minute trading strategy. So it depends on how you develop your strategy. If you develop strategy that is suitable for 5 minutes, most of the time, my suggestion is that just to stick to 5 minutes, okay? Because when it comes to it's a basic question, which time frame that it's a frequently asked question, which time frame that we should use to trade. It actually all boils down to what trading strategy that we develop for that particular time frame. Okay, so I believe that would be the direction that you can actually look into it. All right, so what time frame that you are comfortable to trade with, and then start develop trading strategies for that particular time frame.
Okay, the next question is, what is the definition of prop traders? Does it mean having proper license, having experience traded for hedge funds, investment bank, etc.? Maybe can you please elaborate a bit about this?
Is it prop trader or pro trader?
I think it should be a prop trader, because just now you are covering for prop trader, right?
Okay, so definition of prop trader. Okay, as I've already mentioned, there are generally two types of trader, right? One is you trade your own money, and then another one is you trade the company's money, or you trade the firm's money. So it depends on different country regulation. So for example, it's like trading stocks in US and even in trading stocks in Malaysia, definitely yes, you need to have a dealer license in order to do prop trading. But for futures trading, I think at least in Malaysia, I think there isn't a requirement for a prop license because you are trading the company's money. So for a prop firm, it can be any company that they come up with a capital for people to trade, or come up with capital for traders to trade. So this is what I define as a prop firm. So a prop firm can be any individual company. It can also be a hedge fund or even investment bank as well if they have a prop trading division for that. So yes, it would be nice to gain some experience in prop trading because as independent trader you're trading alone. uh, there's not much guidance. So being in a prop firm does provide some other advantages that individual traders, independent traders do not have.
Okay, the next question is this is a very interesting question. He's saying that normally I'm going to have a streak of winning days followed by a streak of losing days. So, is there any guidelines for which day it is not advisable to trade or not?
All right, it's a good question. So this is commonly a frequently asked question by a lot of traders is that when market is good, it seems like winning is easy, and when the market is not good or against us, then it follows with a streak of losing days. So whether is it advisable when not to trade is that the first thing I always go back to the first principle is that you know do you have a trading plan? Do you have a trading strategies and trading systems that you can strictly follow with? And if you do have that, you need to be able to understand the advantages as well as the disadvantages of your trading strategies and trading systems. So once you have a very good insight and understanding of the pros and cons of your strategies and systems, so this is where even though losing days, you will still continue to trade because that is, it just happened is that the day is not favorable for your trading strategy, but it is still something that we want to consistently do because ultimately we believe is that by following the trading strategies and trading system, ultimately your net performance would be a profitable one. All right, so this is something that we can look into.
Okay, the next question is related to trading psychology. How to manage the pressure after losing money?
All right, how can we manage pressure? It's losing money. First is that you got to see for yourself whether have you closed your position or not. Okay, so this is the first thing I would ask people: have you closed your position? Have you get out of your trade or not? If you haven't get out of the trade, then there would be still losses there. So the first thing, if we feel stress or pressure, having losses in trading is actually just to close the position, stay away from trading, get some rest because when we mention about losses, it deals with grief because grief is something that it's your hard-earned money anyway, right? So you lose part of your excess money, you lose part of your savings, you are in grief. So do take some time to clear your mind. For some people, I'm not quite sure how to deal with pressure. Some of a few things is that always go back to the general stress management principles or techniques is that you can do breathing exercises, you can go for sports, you can do meditation, you can do yoga. For some people, they would eat to regulate their emotions. So there are a lot of approaches for us to manage stress and pressure. So of course, you need to find one that is suitable for you, and most importantly, whether it is helping you physically and emotionally, so that you are able to regulate your emotions as quickly as possible. And the next thing, after you have already regulate your emotions, is that we want to review back our traits to see whether are there any mistakes or errors that we have made in our trading. Is there any area that we can improve, whether be it our, from our capital, from our entry point, our exit point, whether do we have trading execution error, all those stuff. So these are the ways that, how I would actually manage pressure after having losses in trading.
Okay, the next question, a common question, any books to recommend?
Okay, some of the books to read about trading, since we are in futures market, right? So there are two books that I like about futures trading. One is about the title is actually called The Complete Total Trader by Michael Covell, and another book that is also related to futures trading is Trend Following. Probably you may have heard of that book or that term before. Trend Following, also by Michael Covell. So these are these two books, especially very related to futures trading. You can see examples and stories about how from beginners how they build and to become a successful traders. And you will also understand why having a trading strategies, trading systems is important in terms of futures trading. So these two books are actually my favorite books that is related to systematic trading as well as futures trading.
Okay, the next question is also a common question. It's related about the gaps. So this question is related not the overnight gap, but rather even the intraday gaps. So his question is, I noticed the price of futures might have a big gap after the break time. Do you have any suggestion to reduce the risk? Is the cut loss practice applicable?
Okay, when it comes to having gaps in trading, okay, not just only rest time or trading in between sessions, right? There are a few ways in order to reduce this risk, because first thing we need to really disclose is that we can't manage the gap. We can't control the gap. Gap happens because of there may be fundamental changes in the market or information that comes into the market that we do not know. So hence gap happens. So how we can reduce this risk is that number one is that we can actually reduce our trading position. Okay, so for example, if you trade three contracts, if you're not comfortable holding three contracts through rest time, you can actually bring your trading position down to two contracts or even one contract. So this is one of the approach to manage the risk of losses, right? This is one thing. Second thing is that if your trading strategies is actually take into consideration of trading gaps, then I believe you would be comfortable in actually doing gap trading. And lastly, whether cut loss practice is applicable if there is gap or not, is that sometimes gap is when gaps happen, it might be a little bit too late already, because we do not know whether after rest time that gap is actually a profitable gap or a losing gap. So cut loss usually refers to losing gap, and in order to reduce the risk, I would say that reducing position size would be one of the number one thing for me to reduce my risk, because when it comes to cut loss, it might be a little bit too late already. So yes, when it comes to trading cut loss, it is still something that we need to do. Yes, it might be painful, but it's a correct thing and it's the right thing to do.
Okay, so you can see that majority of the question, right, from what CY already answers, is basically related to your training strategies and training system. Once you have your clear training strategies and training system, basically majority of your question can be solved easily. Even like just now, CY already mentioned the gaps. If you really understand your training strategies and system, you already know that what kind of strategies that you're using, what kind of gaps that you are going to face with. So automatically you will know the gaps maybe is going to favor you instead of against you. So because of time limitation, we are not able to finish all the questions. So let's proceed to wrap up the session for today's session. Anyhow, thanks for CI for your clear answer for all the questions being given by our participant. So just now, for those who not yet finished your feedback form, do you mind to just give a quick scan for this QR code and provide us with your feedback, or else in the chat box there's a link. Please click on the link to provide us with your feedback, because your feedback is very important to us. Now, as I mentioned to you, not only today's session, upcoming every Tuesday, we are going to have different topics, different languages covered by different speakers. So any session that you would like to attend, please scan this QR code, or else in the chat box, our admin already provided the link. You can click on the link to register the session and lock in your date accordingly. So you can see that upcoming we have Mandarin session, followed by 2 English session, and also we're going to start with the Malay session after the Raya session. So once you click on the link, you're going to come to the events calendar. Please select on the Tuesday itself and select the session that you would like to join. Now, not only the Let's Learn Futures webinar series, Bursa Malaysia also provided this Let's Learn Futures online workshop. Now, as I mentioned to you, just now I saw that many of you are beginners. You have less training experience, some of you even less than a year, etc. So this workshop is suitable for beginners, meaning for those who have zero knowledge, or even those who have less than 1 month or half a year of knowledge. This online workshop is definitely suitable for you. So you can join any of the session. We strongly encourage you to join online workshop 1, then only followed by online workshop 2. As I mentioned to you on the 30th of March, just now I already confirmed this session is already full. So if you are interested to join the English session, please register now, because right now we already open for the 4th of May. You can register. It's only 1 month down the road, so you can start to register for the 4th of May. For those who can understand Mandarin, you can join for the session on 20th of April. So please scan this QR code, and every session we only open for 130 to register, and on the day itself, we only limit to 50 online attendees. The reason behind is because we are going to really thoroughly go through all the basic, and also, like for example, futures training plan, etc. So any question that you face with, we are going to answer you. That's the reason why every session, Bursa Malaysia only limited to 50 online attendees. Now, once you click on the events calendar, again, you search for the Saturday session. So upcoming 30th, if you couldn't make it, you can make it for the 4th of May for English session, or on 20th of April for the Mandarin session. Now, the last 2 parts, this derivative trading simulator, DTS, is provided by Bursa Malaysia Derivative. It's a simulation environment. So you can use this DTS to do your simulation. So it's a real-time simulation. So how do you access to it? You access to bursamarketplace.com/mkt/DTS. Now, this is the last part. I'm not quite sure whether you're aware or not, Bursa Malaysia Derivative just launched the Futures Trading Apprenticeship Program, which just now some of you also asking, so you already covered about the prop trading firm, etc. So if you want to become a professional derivative traders, you can start to apply now. They already start the application period from 21st of March to 7th of April. So it's going to close soon, within maybe 10 days. So what you can do is, in the chat box, our admin already provided the link. You can click on the link to understand better and also to apply as well, because every session is only limited to 30 participants. So just grab it as soon as possible. Now, the last part, Bursa Academy is a comprehensive one-stop e-learning platform provided by Bursa Malaysia. So you can get all the information within this Bursa Academy itself. You just need to access to bursaacademy.bursamarketplace.com. So, or else you can scan this QR code to access to Bursa Academy. So this comes to the end of our session for this evening. Really thanks for your participation and really thanks for CY so informative and interesting presentation. I'm going to see you in the near future and have a good night and thank you very much. Bye-bye.